Mike, what do you think about these numbers?
Well, they're going to continue to surprise the Fed because the Fed has all along thought that we would see unemployment rise along with the higher interest rates that they've put on top of the economy. And it's just not happening. Companies are holding on to workers. We are not seeing the kind of changes in the labor market that the Fed was anticipating. Now the question is, can they figure out a way to do monetary policy with a different kind of employment target? Also, just this morning, durable goods orders out down 5.2% after a 4.6% rise the month before. Ex-transportation, though, up 0.5. So I think this is probably, without having the breakdown in front of me yet, this is probably Boeing aircraft, fewer deliveries during the month. Capital goods orders, non-defense ex-air, up 0.1% after a 0.1% rise the month before. So companies still spending money, not quite as much as they were perhaps earlier in the year, but we are seeing companies still ordering. And so that is some good news for the economic growth story.
Mike, how will the Fed balance this environment where you've got still a resilient job market, but some weaknesses evident in the manufacturing sector, inflation clearly decelerating, at least in the short run? Can they sort of now start to think inflation has eased enough, growth could stay stable, but inflation has eased enough, and then move to a stable sort of policy stance? Or is that not enough of a justification? Do they actually need to see weakness in the job market evolve?
Well, that's an interesting question. They say they need to see some weakness in the job market. And of course, next week we'll get the August jobs figures and we'll see if it shows up at all. We have seen at least slower job creation. But as you point out, inflation has come down. The question is, will it keep going down? They don't know. And so they're probably thinking it's too early to say that we are done. We spoke with Jim Bullard, the former St. Louis president, just a few moments ago. And he's basically said he thinks we're still in line to get higher rates.
I think the biggest question right now is the reacceleration in the U.S. economy. Atlanta Fed's GDP now showing substantially above trend growth for the U.S. economy in the third quarter. That's following higher than expected growth in the first half of 2023, and for that matter, in the second half of 2022.
So we are watching to see what comes out of this meeting and Jay Powell's speech tomorrow morning to see if he is going to be able to balance all of these things that Gina was talking about.